Welcome to the Explainer. So picture this. Three identical people starting out with the exact same bankroll.
10 grand. That's a solid baseline to anchor our financial experiment right from day one.
Here's the kicker. Controlled conditions. They're all starting off in the exact same year.
They enter the exact same market. We're talking about an absolutely, completely fair race here. And they get the exact same opportunities. It's a perfectly controlled, totally scientific test. But watch this. Fast forward 10 years, and their financial futures are wildly different. Why?
Let's meet our three competitors, taking completely different paths to build up that wealth.
First up, the day trader. They're glued to charts, hunting for quick profits before lunch.
Second, the swing trader, checking in maybe a few times weekly for bigger market waves.
Finally, the index investor. No charts, no panic, just chilling out on the couch.
So, here's the million-dollar question for you. Which one actually ends up with the most money?
We usually assume the hardest working, highest stress day trader naturally takes home the biggest prize, right? But what if the internet's loud hustle culture actually has this completely backwards? Seriously, what if just one simple piece of math completely changes everything you thought?
In this explainer, we're cutting the noise. No hype, no opinions, just real hard math.
The scoreboard is set, so when the final numbers drop, who actually built the most wealth?
Let's dive right into the fast money illusion in day trading. Fact versus fiction.
Let's be totally honest. We all crave fast money. It's a universal desire that hooks us instantly. Social media completely fuels this myth, constantly bombarding us with crazy screenshots of massive overnight gains.
It's pure psychology. Our intense fear of missing out constantly battles our ultimate desire for financial freedom.
So ask yourself, if trading is really that profitable online, why do most everyday traders eventually quit?
Let's push past the emotion. We're going to compare three distinct trading strategies using the actual hard numbers.
Welcome to the Decalogue of Disciplined Investing. We're running the ultimate, perfectly fair market experiment. Let's set the stakes right away. Every single investor starts with exactly 10 grand. Meet our players, a day trader, a swing trader, and an index investor. Level playing field, right? The challenge? They've got to invest this money over a grueling 10-year timeline. But here's the catch, guys. They must survive a totally brutal, real-world financial gauntlet. First off, no fantasy numbers allowed. Their performance is tied to actual, cold, hard market reality. Next, Uncle Sam taking his cut, and those nasty market dips? Yeah, completely unavoidable. Add in the quiet drain of trading fees, and the absolute final boss, human panic. So, what's your guess? Who actually survives this grinder and wins after a full decade? Here's the twist. The winner isn't who makes the biggest gains. Insane, right? Let's rethink everything.
Let's dive into day trading. It's a glamorous world of high excitement, but honestly, brutal math. Meet Jake. He's glued to the markets every single day, relentlessly hunting for that next big move. Why do it? The lifestyle is totally intoxicating. Fast profits, constant action, and a pure adrenaline rush. But reality hits hard. Instead of winning all the time, Jake takes massive, absolutely devastating losses. This triggers overtrading. He makes excessive, purely emotional decisions to chase those losses, which just guarantees more. Profitable trade? Barely. A staggering 75% gets completely devoured by taxes and transaction costs. Brutal, right? The result is a crazy roller coaster. Massive, stressful spikes are followed by terrifying account-draining plunges.
So here's the ultimate painful takeaway for us. The problem isn't making money, it's actually keeping it.
So is slower swing trading any safer? Well, think again. A completely different hidden danger is lurking.
Today, we're dissecting the exact middle ground of the trading battlefield. So, looking for that sweet spot, the one between staring at screens all day and waiting years? That's swing trading. It bridges the crazy chaos of day trading with the slow burn of long-term holding. To really see how this works, let's meet Sarah. She's our classic, everyday swing trader. Sarah totally ignores daily noise. She'll hold positions for a few days or even weeks, catching bigger trends. The upside here? Way less screen time, fewer trades, and she keeps a super tight leash on risk. But it's tough. Nailing market timing is hard, and missing sudden rallies can seriously mess with your emotions. The hard truth? Well, it's definitely more stable than day trading, but your overall returns are still pretty inconsistent. So, watching Sarah's journey, ask yourself, would you pick this strategy? Does it actually fit your risk appetite?
If that inconsistency worries you, is it maybe time to just embrace the boring buy and hold strategy instead?
You know, there's actually a massive investing mystery hiding right in plain sight. In the crazy, hyper-competitive race of modern finance, who actually holds the winning strategy? Just look at that towering mystery bar. Who on earth is completely crushing seasoned active traders? Well, meet Mike. He's the completely unassuming guy behind this top-performing mysterious portfolio. His secret? Mike just buys index funds. It's literally the exact strategy nobody ever brags about online. His approach totally cuts out the market noise by relying on 3 surprisingly simple rules. First up, instant diversification. He owns tiny pieces of hundreds of different companies, all at once. Second, absolutely zero stock picking. He completely skips the headache of guessing which individual companies will win. And third, zero screen time. He completely ignores the emotional roller coaster of checking daily stock tickers. So Mike's reality features absolutely zero stressful dopamine-driven trading alerts. It's just quiet, steady compounding. Without flashy alerts or crazy screenshots to post online, yeah, his approach looks incredibly boring. But here's the absolutely crucial takeaway for us today. Boring does not mean weak. In investing, this total lack of excitement actually equals profound financial and emotional strength over time. Seeing the quiet, compounding power of Mike's strategy, you really got to ask yourself, is your portfolio too exciting? We're exploring the hidden psychological war waging deep inside the financial markets. Have you ever wondered what the market's true hidden killer is? What silently destroys everyday portfolios? Okay, let's dive into this. The true, unseen enemy destroying your portfolio actually isn't the market itself. It's your own psychology. Unchecked emotions and mental biases are the hidden adversary nobody really talks about. Take the day trader. Their insanely fast-paced environment makes them incredibly susceptible to sudden, devastating emotional collapse. Severe stress quickly leads to burnout, triggering dangerous revenge trading, which totally drains their accounts. Then there's the swing trader. They trade rapid panic for a fierce, slow-burning psychological agitation. Their specific agony, the absolute mental exhaustion of constantly second-guessing every single move they make. But what about this seemingly passive index investor? Nope, they aren't immune to these mental traps either. Their ultimate vulnerability is capitulation. It's that terrifying temptation to completely quit during major market crashes. And this brilliantly illustrates the contrast. The active, erratic panic of day trading versus passive indexing dread. Let's move to and see how this builds into massive, grim historical realities for the entire market. Just look at the 2020 crash. Initial drops bred agonizing fear, culminating in widespread, irrational panic selling. Now, what's really interesting about this slide is the chronological deterioration. Rational thought completely breaks down. So, the crucial point is, we've finally unmasked the hidden killer silently destroying everyday investment portfolios. The biggest enemy wasn't the market. It was themselves. Will you learn to conquer your own mind? Today, we're totally flipping how you measure your wealth building strategies. Let's dive right in. We're unpacking a massive reveal backed by exactly 10 years of hard data and real side hustle math. Normally, investors just focus on the basics, right? Mostly looking at total financial return and the taxes paid. But wow, factor in time spent, stress levels, and hourly earnings, and the whole picture completely flips. Enter a literal game changer. Return on time. This metric is an absolute paradigm shift for your portfolio. You can't just count cash anymore. You gotta weigh the dollars earned directly against personal hours sacrificed. Society constantly feeds us the effort trap. You know, that myth where maximum hustle automatically equals maximum wealth. But our 10-year data drops a bombshell. The highest effort frequently yields the lowest actual wealth. Crazy, right? So look at your own projects and honestly ask yourself, are you optimizing for dollars or for time? Diving into a massive paradigm shift, it's time to literally rewire your brain. Look, we all spend years desperately trying to beat the market. But honestly, that is the ultimate trap. Because the real challenge, it's beating your own behavior. Market mastery is absolutely just self-mastery. To really get this, we're going to look back at 3 totally distinct investor identities. Let's break them down. First up, the day trader. They're hyper-focused, chasing that adrenaline, and exploiting crazy daily volatility for quick wins. Next, the swing trader. They take a slight step back, trying to ride those emotional market waves for weeks. Finally, the steady index investor. They totally ignore the noise, playing that slow, reliable, compounding long game. So what's the common thread? Well, across all these strategies, the math was actually never the hardest part. Absolute discipline is. Your success doesn't hinge on predicting the future. It's about sticking to your plan. So, which investor are you right now? Day trader, swing trader, or index investor? Drop your answer below. What happens if you relentlessly invest just $100 weekly into the S&P 500? Find out next, Explainer.